Jim Woods, editor, Intelligence Report, and Shah Gilani, Chief Investment Strategist, Money Map Press. Thank you both for being with us. Jim, I'll start with you. You sent us a lot of great notes. Tell me about the FAANG play and investing in these growth stocks. Jim?
Well, so far this year, it's been nothing but a good thing to do. We're starting to see a little chip in the FAANG, though, and we started seeing that last week with Netflix. I think the stock's down about 10% since its earnings report, which wasn't all that bad. I mean, they did miss on EPS, but the revenue was strong. But it's that growth issue going forward that they warned about for Q3. So that's the problem for Netflix. They're not going to be able to grow as fast as they did in the second quarter. But, I mean, consider that second quarter was the height of the pandemic. So and now that we're seeing more coronavirus cases and more shutdowns, you could actually have a pretty good quarter, a better than expected quarter for Netflix going forward. But of course, the real moment of truth is next week when we get Apple, Amazon, Facebook, and Google. Wednesday is Facebook, and Thursday is the other three. So it's going to be a moment of truth, as I say, for FAANGs next week. So I'm looking forward to seeing what happens.
Shah Gilani, thank you for joining us. I'm glad you're here with us today so that you can give us your take on the FAANG names. Would you buy ahead of these earnings next week? We already heard from Netflix, but the rest of the group reports next week. Would you say step in and buy the group, or are you in more of a hold mentality right now?
Well, first of all, good afternoon. Thanks for having me, Nicole. It's great to see you and be with you. I would say really up until the first set of earnings coming out of Netflix and then Microsoft, which I think hit it out of the park, looking at investors' reaction to both Netflix, Microsoft, and the rest of the FAANG stocks, I put Microsoft in with the FAANGs. To me, it's the FAANG stocks and Microsoft. I'm not so sure that the bloom may be off the rose as far as earnings. These stocks may have peaked in the short term. They've had an unbelievable run off the March lows. And investors, I think, are taking profits in here ahead of earnings, and certainly in the case of Netflix, on account of the earnings. Microsoft got hit in terms of its stock price based on the fact that though its numbers were fantastic, expectations for growth in the Azure and the Microsoft Cloud were somewhat lower than what the analysts had expected. And the stock got hit because of that. All of these stocks are trading considerably now off their very recent highs, and I think that should give investors some pause in here. I wouldn't be buying them here. If they dip deep enough, I certainly would add to positions lower.
Which ones do you, before I get back to Jim, Shah, which ones do you like the best? So when you see pullbacks on these names, FAANG plus Microsoft, which one are you going to step in and buy first?
Microsoft is still my favorite, has been for many years. I really like Facebook. I don't think they've done a great job at managing the company in terms of its outward appearance. And they're also facing now these backlashes from advertisers. So I think it's got a little bit perhaps of a hit ahead of them. If they come down enough, I certainly would add to a position in Facebook. Besides those, I think Apple, of course, probably going to hit it out of the park again, even though the expectations have been lowered. They probably should beat. It's hard, almost impossible to bet against Apple. So any good pullback in Apple, I think, is an opportunity to buy in there too.
Jim, what do you think? Last I checked, I thought Apple was actually pushing back one of the phones, the newest phone, the 12. Which one do you think is probably the best bet for buying, at least in the near term? Where do you think, I know you don't give stock recommendations, but where do you see some strength, Jim?
Yeah, actually, well, I'm happy to give recommendations here. I think Facebook, I agree with Shah. I think Facebook is a good company to own right now. I'm always of the opinion that when all sides of the political aisle are gunning for you, and we have these protests and things like that, and these advertiser issues, those are just temporary blips, in my opinion. Like, I do not think that Facebook has done a very good job of managing it, as Shah said, but everybody needs to be on Facebook, especially in this political season. That is where all the money is going to go in advertising, and I don't see their earnings or their revenue getting hurt at all going forward. I expect them to blow it out on Wednesday. And as far as Apple, I mean, Apple is probably my least favorite of the group because Apple's, like you just mentioned, that they're pushing back their iPhone 12, and they've also got some renewed legal issues. Plus, Goldman still maintaining a sell signal on them, which is somewhat bothersome in my opinion. But nevertheless, the street's kind of a little bit bearish on Apple. So I wouldn't be, that would be the last one I'd go into. But I certainly like Amazon here. I think their AWS business is going to be awesome this quarter. And they've proven that they can continue to go up even when they have stumbles in their earnings. So I like Amazon too. Mm-hmm. Google, we'll see what they what they can pull out in terms of their cost, their acquisition cost. For per eyeballs, and if that goes down, which it's predicted to do for the first time in like 16 weeks or so, or 16 quarters, I think that would be a good sign for Google going forward as well.
Jim, maybe you have a quick thought on Twitter because you mentioned Facebook and the election. Are you a Twitter fan? Quickly, Jim.
I'm more of a Facebook fan than Twitter. Twitter seems to have a tough time monetizing what should be a very monetizable platform. So if I had to pick between the two, I'd pick Facebook.
Yeah. And Shah, what's your big picture market, market outlook for investors at this point, Shah?
Well, right now, I've just turned slightly cautious because of the reaction of all of the FAANG stocks and the big tech stocks are having to earnings. And let's not forget, we have a very big day on Monday because the CEOs of Apple, Amazon, Facebook, and Google go up against the House Judiciary Antitrust Subcommittee in a virtual hearing. So we're going to see, I think, those CEOs pilloried for their size of their companies, their profitability, and for their social outreach or lack thereof, and all kinds of other issues. So I think Monday is going to be a tough day for the big cap tech stocks. And if it is, then we could see further profit taking. And that's got me a little cautious in terms of the entire market because we've been led higher by the mega cap tech stocks, and if we're going to go down, it's probably going to be on the heels of profit taking there.
Right. All right. So next week is huge. We've got to watch everything. Thank you both so much for joining me for this excellent conversation. Jim Woods, editor, Intelligence Report. Shah Gilani, chief investment strategist, Money Map Press. Thank you, gentlemen.